Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete. I'm here with Nick Twidale just to give you a quick fast update on the situation of the global markets related with Donald Trump election. Has a new president of the United States. He's back. And I would like to introduce also from Australia, my colleague, Nick Twidale, market analyst. I'm based in London. He's based in Australia. We thought that this conversation could be the best for our audience, for those ones who follow our channels and social networks, to give them a quick update. And I would love to start, Nick, with the Forex, the currency market, to see what's your view from Australia on the impact of Donald Trump re-election. I guess dollar, but also any other currency you think is relevant in relation with dollar, and how you see the market at the moment.
Yeah, sure. Thanks, Gonzalo. And sorry to keep you up on a cold London night. It's blue skies and sunny in Sydney. I think we've seen a very interesting couple of days reaction in the currency market. So immediately, as soon as we saw, and it all happened in the Sydney time zone, as soon as we saw Trump getting into the lead, we saw the dollar start to move, and it accelerated over the course of that day. Obviously, I think we know where he's given us clear indication of what he wants to do. And the initial reaction really did follow that. So the dollar improved dramatically across the day. We saw it improve strongly against the Chinese currency, so the CNY and the CNH. Mexican currency, of course, because we know that we're going to have issues with tariffs for the local economy, and euro as well. So I think the biggest and hardest move we got was in the euro, really, for the bigger market, because that's the most heavily traded currency. It's the most liquid. And we know there's going to be tariffs coming into play against the euro. The interesting move, I think, for me, and one I didn't really expect as much, has been the retracement that we've seen in the last couple of sessions, where they've regained most of that lost ground. Personally, I still think that we're going to see the dollar appreciate over the next few months. I think Trump's going to bring it, and he has got the key thing for me with the election as well, was the fact that he's got control not only of the White House but of Congress as well, the Senate and the House of Representatives. So he can implement those policies that he's been talking about. I suppose now the market really wants to know how hard he's going to go with them, but I do see the dollar appreciating over time as it comes, and I think we look at those currencies as probably the main drivers. So any the CNH, the Mexican, and the euro, and then everything else will react on that. So secondary, if China starts to look under pressure, good proxy trade is always the Aussie dollar, our local one here. That will get hit, and that's had a massive rise back overnight, which has surprised me a bit. But I think we're going to start to see the dollar gradually move up. We're going to be keeping a very close eye on Treasury yields as well when we're covering what's moving in the dollar. But overall, I think we'll probably start to see dollar strength creeping into the market over the next few months.
Completely agree, Nick. And basically, that's the promise he did. Donald Trump said that he will force other countries to reinforce the position of the dollar internationally. He said he would recover the dollar as a world currency, forcing by sanctions to other countries to readopt the dollar as the world currency for international trading.
Absolutely. Yeah. So I think we could see the start of fresh new trends over the next few days and weeks. So it should be very interesting. Moving on from currencies, I know we'd love to get into your speciality. How do you see the stock markets reacting? I know we got a really strong reaction initially off of Trump's election, and everyone's very positive. But how do you see that moving in the more medium term?
Well, I will say that the first reaction, we have seen how the equity market in US was moving in completely opposite direction to the German and especially the European market. And I say German because we have seen that in the last 24 hours, a new crisis came up, which it was a new crisis related with the government of Germany, when the slot fired the Ministry of Finance. And because a comment that Minister of Finance said that the slot cannot actually give the boost of the German economy needs. So I think that's one of the reasons we mainly see the stocks in Europe falling, or not falling for the last few hours. Just the last few hours have been recovered certain levels, but still there is a massive difference in the last 2 days between US equity market and the European market. I believe the reason is, first of all, the euphoria in the United States. We have seen that the new administration of Donald Trump has been promising many different things, including Elon Musk which he was, by the way, taking Tesla 12% up the first day. We also have seen, for example, energy sector, ExxonMobil rising, also breaking up new resistance, quoting about $120, $22, and it's still pulling back again, but a clear signal that he's compromised. He actually support openly the energy sector. So all of these industries related with gas, fracking industry probably are celebrating his victory. And I will say also financial sector, because financial sector also has been really linked to Donald Trump in the past, in the first administration. He promised also shutdowns. He said for every new single regulation approved or every new single act or law approved, we will take down 10 acts or 10 new regulations, which means like they probably gonna move in that direction. The new administration probably gonna facilitate less taxes and also less bureaucracy for the financial sector. And that's why I think that's three sectors. Technology obviously was already one of the top sectors rising for the last couple of years, but it's gonna keep going now. And also, I will say financial sector because of the classic support that Donald Trump has been always bringing to unregulated the financial industry, and the energy sector because he has been openly supporting also the gas and oil. Don't forget that, for example, Biden was shutting down certain pipelines that it was built in the west coast of United States, and probably with Donald Trump they're gonna reactivate all of this market. One of the top third producers, world producers of oil, is United States after all this revolution they did for the last 10 years in energy, and I think that's why Donald Trump gonna reactivate that. So I would say that three sectors are the main one who has been celebrating the victory of Donald Trump. And in general terms, 2016 it was actually a bullish market after U.S. elections, and I expect that probably that's what we're gonna see for the last at least couple of months until the end of the year. We're probably gonna see a bullish market.
Yeah, I totally agree with you. I think you're on the right lines, and we've seen those reactions in the market. Would you say we're probably going to see some differences then between the global stock market? You already touched on Germany, but maybe traders might be looking, especially if they're just looking at indices, that maybe we see US indices coming in stronger and they trade them against some of the other jurisdictions. So to obviously China, we pointed out European indices and maybe even Japanese indices, that there might be cross trades across those from a stock perspective.
Totally, even opportunities for pair strategies, shorting ones and buying others, because at some point the correlation probably going to play a good role there, forcing the index, the world index, to start to join or reduce the divergence we have seen the last couple of days, which means like European market is keeping flat. Eventually, even a correction in the case that DAX, for example, lost 19,000 points. But again, I believe, especially Chinese market, Hansen, for example, is a name that's super sensible for the stimulus measure approved by Chinese government. And I think even the Chinese government was actually waiting to know who is winning the U.S. elections to take further decisions in terms of monetary policies, fiscal stimulus. So I think everyone was waiting for this moment, Nick. And now it's time to adjust, I guess, every region, Europe, China, United States, they're going to probably adjust, especially Europe and China, their strategies, and we will see a reflection of these strategies on the equity market in the coming days.
Absolutely, and I think we probably both touched on it as well. And you know, it does feel like that Trump will bring back, as he has in the past, these trade war type situations. And like you've said, it looks like Europe are in target, and China as well. So I think those kind of trades, and as you touched upon, I think both sectors would have been foolish if they weren't making preparations if Trump did get what he has, which is kind of a landslide victory. So how do you see that affecting European markets moving forward with
Not good.
Sector, right?
I would say not good at all. Because look, even then they getting ready. I mean, you have seen it was the European Summit today, and you have seen some very long faces there because they know this moment will comes. And some of them they openly even manifestate right their opinion about Donald Trump. They wish he will never get back to the White House. So the question is what's going to happen with those European leaders who say that openly, because they need to keep the relations with the United States now. And I guess the elephant in the room is Ukraine. They bet really hard on that war. they compromise a lot of money and the European budget on that war. Even German government, which is right now pending on a suspension and probably early new elections by March this year, if he doesn't get the support from the parliament, has seen like, well, regardless Trump victory, we still got to compromise certain number of billions of euros with the Ukrainian war. So the main question is what's going to happen in that regards. And I will say the trade war is coming because Donald Trump say that he's about to impose 60% on tariffs on Chinese importation, but he also say between 10 to 20% on all single foreign importation in the United States, which means like it's affecting every country, and particularly in Europe, is pointing in Germany because he during his last administration he also forced Germany. I think the deficit, the trade deficit, United States with Germany was around $60 billion, and he was basically forcing Germany to like, look, either you buy liquid gas from United States or we stop buying German cars. So he's definitely gonna push the trade balance with Europe, and is in obviously in an open trade war with China since he left the White House.
Yeah, I mean, obviously over this side of the world, China's been struggling. As we know, Chinese markets have been under a lot of pressure, and then they're very vulnerable if they do come in from these massive 60% tariffs that he's promised. So I think there's a lot of consternation, not just in China, but in all of the Far East and the Asia Pacific region, because there's concern that this really will hit global trade. So I think, like we've been discussing, I think the shorter term is it's probably very positive for US markets and negative for these others. But over the longer term, it will really constrict global trade. So it will hit the US markets as well. So
Totally.
It's going to be very interesting to see how quickly he implements some of these policies. And obviously we've got a couple of months before he actually steps foot in the White House. But if he starts to move very quickly, I think we could start to see some really big corrections in the market. So certainly plenty of volatility to come in the future, days, weeks and months. But it's going to be interesting times ahead for all of us, I think.
Totally. And one of the main problems that he could bring back, as you say, in middle term, not immediately. Immediately is everyone is celebrating these measures. That's why he wins election, right? Because generally speaking, people want these decisions be taken. But I will say in middle term, if you deportate a massive population from the United States, especially those ones who probably are in a legal situation and will work for lower salaries, and you also establish tariffs to importations, but basically what you're doing is inflationary policies, because you're going to reduce the productivity of the country, you're going to increase the prices of any single good or service in the United States by deporting people, which is going to probably pushing up the salaries by average, and also by reducing the labor force in the United States by taking people out of the country, and also by increasing the prices of importations, which means like obviously at the end of the day, in long term, middle long term, inflationary policies. So that's why Federal Reserve is going to have a hard job for the coming months. And even Powell was saying today, I'm not going to resign. So even the people are asking him if he's considering resign.
I think the Fed's reaction is going to be another video for us in the coming future, to be honest, because
definitely
they're going to be in a tricky situation. They play the data game, but with the rest of us in the market, we're looking ahead, and it's, can we see too many more rate cuts coming in the future with a Trump government? So I'm thinking probably not, but maybe we'll leave that for the next video. Thanks so much,
Totally.
Gonzalo. That was awesome.
Thank you, Nick. And just a reminder for our audience, in the last administration of Donald Trump, between 2016 to 2020, I think it was 2018, December 2018, Donald Trump published on the old Twitter a comment say, the worst enemy for U.S. economy is not China, it's the Federal Reserve. So that is giving us an idea of how far he can go when he's starting to push to the Federal Reserve also with the monetary policies. Thank you, Nick. It was a pleasure to share this space with you. And yeah, we're going to keep in touch to make the next coming videos about the Federal Reserve probably.